Hello, my name's Ethan. Make sure to check out my website, ethanwrenn.com, where you can find links to all my various socials. While you're there, I also have a blog. You can read some great articles, and I also have a shop. You can buy some hats, hoodies, all this great stuff. So I highly recommend checking that out as well. Here's an example of what one of my blog posts may look like. You just go to my website, click blog, and you can. There's a bunch of different articles. Find one that suits your fancy. Scroll all the way down. There's just a bunch of information regarding the product, regarding their top holdings, and every blog post has its own unique video associated with it, so you can watch that. And the very bottom, you're able to leave comments and give me feedback on how I can improve. Next video we're going to be watching is housing markets, mortgage rates expected to decline. This is from Yahoo Finance, and it was uploaded 2 weeks ago. 2 weeks ago. What did we say? We are currently in the middle of housing having sold off throughout all of 2022 and is currently at a low, an objective low, a very good support point. We've covered this in symbol XLRE, which is a sectoral ETF that represents real estate companies in the United States. I highly recommend going to watch that on my YouTube channel. And we explain that rates were increasing quite aggressively throughout 2022. And now rates are at this near peaking point while real estate is at that support line. And all these major media outlets, including Yahoo Finance, are currently expecting the Fed to stop aggressively increasing rates, potentially enter a period of just flatlining the rates before it enters a period of declining rates. Because of this, you want to start positioning your capital in investments that are going to benefit during a declining rate environment, such as real estate. Let's see what they have to say.
Close eye on the housing market. Buyers are flowing into the new home market. Sales of new single-family houses hitting 683,000.
Not only that, but demand for housing, again, this is 2 weeks ago. This is very fresh news. 2 weeks ago, demand for real estate in the United States is up and growing and thriving, even with the current rate situation, which, again, if you go back and look at some of the other information we've done about like how to calculate inflation, again, these are all available on my YouTube channel. You'll see that raising rates is not going to help fix this situation because the current price gouging that's happening in the United States, I just highly recommend you go watch it, but rates are not an adequate solution for this demand. It's not like the U.S. citizens in the U.S. are just frivolously buying just all this stuff. It's, very inelastic demand. You need to take into account all these different variables.
During the month of April, this comes as mortgage rates continues to gradually trend higher again after a few weeks of declines. Rates on a 30-year fixed rate mortgage, they topped 5% for the first time in over a decade last year, climbing as high as 7%. For more on the housing market, we're joined by Heidi Padalano, who is the National Mortgage News Editor-in-Chief. Thanks so much for joining us on set.
Thank you for having me. Great to be here.
Certainly. So we were just diving into some of the numbers that broke this morning, particularly on the new home sales front. And one of the kind of figures that caught my eye here was the median sales price. That's sitting at about $420,000 right now, so just shy of $500,000 there. And particularly how that correlates to where people are finding mortgage rates. You say in your notes to us they're expected to remain volatile in the near term, but what about as we get towards the end of this year where there's not as much buying that typically takes place towards that kind of lather?
He's stating that we see a decrease in demand for homes going into the later half of the year.
Latter half, or at least the third, fourth quarter of this year.
Right. Well, there's some reason for optimism for first-time home buyers, those looking to get into their homes now, in the near future. As we're noting, a lot of Fannie Mae is predicting that there may be a recession, of course, coming at the second half of the year. We've heard from the Mortgage Bankers Association they expect
markets are currently pushing like new all-time highs. Like you have the European nations major market index actively pushing all-time highs currently. You have gold pushing new all-time high. Like you have tech just going absolutely to the moon right now. That's the most crazy thing I've ever heard.
rates to go down to about 5.6 by the end of the year, which should bring some people back to the table in terms of being interested in getting back in there, finally making an offer on a home. So
here's a chart of the mortgage rates. I like how they laid this out. This is pretty good. But again, as I was saying, we are currently at this peak point in rates in the United States, where we're currently at this peak. Rates are high. Rates are above average, right? And whether it peaked in September or whether it peaks 3 months from now, it doesn't really matter. Like on the big side of like it's still gonna move down drastically on a longer time frame, right? So whether it peaked here or whether it peaks maybe even 3 months from now, you want to have your money allocated in a way that's going to benefit from decreasing rates moving forward over a longer time horizon, right? And again, real estate's a great way to potentially benefit off decreasing rates. Maybe you want to potentially be looking at like short-term bonds, you know, things that are going to benefit from decreasing rates long term.
The prices aren't going to come down drastically from where they are now. They may come down a smidge, just a smidge, but really there's so much more demand than there are homes to be bought. So that's really going to keep the...
She keeps putting this emphasis on home prices, and I'm really putting an emphasis on the cost to acquire the loan for the house. She's saying she's not expecting home prices to come down. And again, we already covered this. Go look at symbol XLER. Home prices are down. They're already at the bottom. And it makes sense why she was say that she's not expecting them to come down more, because they're probably not going to come down more. In fact, these loans are only going to become easier to attain moving forward, again, in a declining rate environment, which is going to spark more and more demand. And home prices are already down like a little bit, right? So I don't see them coming down any lower, which again makes these real estate investments very attractive, whether it be for personal homes or companies that invest in real estate for apartments or storage units or maybe retail spaces that they lease out. These are all great assets to be scaling into right now, because we're expecting, again, decreasing rates is going to increase demand for real estate. And it's going to make attaining these loans easier. It's going to make your floating rate mortgages more cost effective. Your monthly expenses are going to be cheaper. So these are all things to take into account.
The prices pretty much where they are for the moment.
Well, that, and if we're seeing mortgage rates come down, doesn't that give a little room for prices to go up? In other words, isn't when mortgage rates go up a lot, isn't that a little bit of a curb to some extent on pricing? Because if you're buying a house, you need a little bit more of an incentive on the pricing side. Right,
Absolutely. And it's interesting that across the country, every market is different, and we're seeing more and more of that every market has its own unique dynamics, and there's different things at play. For example, in Boise, Idaho, over the pandemic, the prices went up 70%. And now they're coming back down. They came back down by about 8% from last year. So where there were huge increases, there is a little bit of a correction right now. And so, yes, with rates coming down a little bit, they want to close that deal. It's possible to maybe come down a little bit more on price.
That might be a little bit of a correction, but that's not, if it went up 70% and it's just coming down by 8%, that is still incredibly elevated. In other words,
Yes, she makes a good point. Things are trending up. The end of the world is not near. Things are continually growing over time. Houses are still good investments.
Are you seeing, as you look across the country, it doesn't sound like that there is a quote unquote.
While it might be down 8% in the past month or two, it's still up 50, 60, 70% over a year. And people don't just buy houses for like 5 months, right? If they're holding for 1, 2, 10 years, 20 years,
Quote, normalization to pre-pandemic levels, certainly.
Right, certainly not. No, from the start of the pandemic, prices went up about 30%. And they're only coming down just a little bit from that. They're still way above historic norms. And so that's actually really good for people who bought in the last few years. Of course, we don't want to see people who have purchased over the past 2 to 3 years have their homes now drop in value drastically. So this is actually good for the health of the overall housing market, the fact that these prices aren't coming down too much. But it's also tough for the first-time home buyers who are really having a hard time getting to into those homes that are affordable to them.
Something that we heard about within the earnings reports of Home Depot and Lowe's was lumber deflation, that being one of the kind of common threads or denominators there. But how does that also play into potential new home buyers as well who are looking for a home and the price that they may potentially pay?
Right. There's hope there. There's some hope there. One thing that's interesting about this market, people in homes that exist today are not incentivized to move. So they're staying put. And the homes that are available to first-time home buyers are those new ones, those brand new ones. Making them affordable at this time is, of course, still challenging because labor and materials are still quite high. But that's where the real optimism is.
Prices for lumber have come down drastically, which again makes it lower cost to build a home. You just have to pray that you're not getting gouged by your builder and they're not just giving you the COVID price, even though the COVID costs are not the same.
In the housing market for those new homes.
When I don't know what kind of consumer surveys you guys do or you draw from. Mm-hmm. When people are making those decisions right now, is it rates? Is it price? Is it still location? Like what are people prioritizing, I guess?
Right. I think it's rates in some ways. Certainly for the people that do own a home now. They're not going to move right now. They're going to wait to see what's going to happen over the next couple months. We're really just in a holding pattern until the next Federal Reserve meeting, and we see what they do in terms of raising the federal funds rate. And for others, it's a matter of relocating to a place that's more affordable for them. Like maybe the existing homeowner will move if they're moving to a place where they can kind of make up the difference in the higher cost of the new home because their overall cost of living will be lower. For first-time home buyers, they want to get into this market no matter what. And so they're just looking. And, certainly a lot of lenders are trying to come up with products that will help them to get into these homes. You might have seen yesterday, Rocket launched a new product where they will help cover the 3% down that a home buyer will need in order to get those people into those homes and make it more of a realistic proposition for them.
Hopefully that doesn't come back to bite on the other side.
Yeah.
I don't know.
Yeah. We'll see. National Mortgage News Editor-in-Chief Heidi Padalano.
Damn, 3% down. That's like nothing. I thought you had to do like 20%. Anyways, that was a good video from Yahoo Finance. Thank you so much. Well, with that, I think that is everything. We're going to be covering in today's stream. Thank you guys so much who stopped by. I really appreciate it. The YouTube channel's been doing absolutely great. Make sure to subscribe on YouTube, follow on Twitch. I've been looking at some other platforms. I've been looking at Rumble, for example. So we might pop our heads in over there, see what's happening. Again, check out my website. Check out the blog post, join the Discord. I hope I demonstrated some of the value that the Discord has to offer that you just kind of can't get on any other platforms. Just, it's so easy to communicate with the community via Discord. We're able to share charts very easily, pictures, and just, work collaboratively. Very great in that environment. So I definitely recommend joining the Discord. It's completely free. We are not charging you. And thank you guys so much. I really appreciate everyone who stopped by. Thank you. That is everything for today.